Okay, so the tariff war between USA and China has escalated even furthermore. So let's try to see what are the latest updates on it. Okay, and let's try to see what is reaction of each other. Okay, so what are the updates on tariff tariff war between USA and China? What are the latest updates? Latest. Okay, so let's read this. So today is April 12, 2025. So as of April 12, 2025, the US-China tariff war has escalated significantly, with both nations imposing steep tariffs on each other's goods, leading to heightened economic tensions and global market volatility. Okay, so China's retaliatory tariffs. Okay, these are the key developments. So on April 11th, China announced an increase in tariffs on US imports from 84% to 125%. Okay, so we already know that China imposed 84% previously, but now it has also increased its tariffs to 125%, marking its final planned escalation. Okay, so see here, this point is important here, final planned escalation. See, Beijing criticized the US actions as economically unreasonable and declared further retaliation would be futile. Because if you are just keep increasing the tariffs from 50% to 125%, 145%, and China keep increasing from 84% to 125%, okay, and then 200%, 300%, 400%. Then China is saying that this is unreasonable because it is just like that both countries are not asking for a trade at all. If you are asking 200%, 300% tariff, even this one, even if you are asking for 145% by USA and 125% by China, then that means both countries are not asking for trade at all. Okay, that is where these numbers are showing. Okay, so that is what China is mentioning here, that these kind of further retaliation would be futile. Okay, and we know tariffs increased. So prior to China's move, okay, prior to China's move, President Trump has raised cumulative tariff on Chinese goods to 145%. So this happened first. First, this happens that USA increased the tariffs to 145%. Then on this, China increased it to 125%. Okay, now what is the economic impact here? So the tit for tat tariffs has disrupted global trade. The US stock markets experiencing significant volatility. Despite the tensions, market showed resilience. Okay, with the Dow Jones Industrial Average surging over 600 points on April 11th, as investors anticipated a potential pause in further tariff escalations. Okay, there is business uncertainty as well. The unpredictable trade policies have left CEOs and businesses in a state of uncertainty and hindering strategic planning and investment decisions. Companies are adopting defensive measures, including delaying investments and reducing staffs to navigate the volatile environment. Okay, so that is here. And then global trade dynamics. The ongoing tariff war threatens to reshape global trade dynamics, with both nations filing complaints with the World Trade Organization and exploring alternate trade partnerships. The long-term implication could lead to a significant shift in international trade relations. Okay, so that is the latest update here. Okay, that China has even escalated it to 125%, imposed the tariffs of 125%, and it is saying that further retaliation would be futile here. Okay, so we can try to dig deeper into that particular point here. Will China not respond further on tariff side, and if yes, then why? So as of the latest development, China has stated that it will not escalate tariff war any further, even after raising tariffs on US imports to a maximum of 125%. According to official Chinese statements, this is their final planned escalation, and here is why they are stopping. So China stated reasons for not escalating further, signaling rationality to the global community. Okay, China wants to position itself as the more rational and stable party in this trade conflict by declaring an end to retaliatory measures. Beijing is appealing to international observers and trade partners as a responsible economic actor, avoiding further economic self-harm. Continued tariff escalation could severely hurt China's own economy, okay, especially its export-heavy sectors. There is a recognition that additional moves could lead to diminishing returns or even counterproductive outcomes. Okay, strategic patience. China's leadership may be betting that restraint could pay off in the long run, especially if US businesses and consumers begin pushing back against high import costs or if political winds shift in Washington. Okay, managing domestic stability. Prolonged economic pressure from a deepening trade war could stoke international unrest or dissatisfaction, something China wants to avoid, particularly in a sensitive post-pandemic recovery period. Focus on diversifying trade partners. Rather than continuing to trade blows, China is working on strengthening economic ties with regions like Southeast Asia, Europe, and Africa through mechanisms like RCEP, Regional Comprehensive Economic Partnership. So we talked about this in the previous one, and Belt and Road projects. Okay, see, the point here is that China wants to have patience in all of this. Okay, because see, unlike USA, China is a single party state. Okay, uh, there is no uh, there is no risk of elections. Okay, in the China, but in USA, elections happens. Okay, and midterm elections happens, and sentiment of American people can change towards Donald Trump and Republican Party. So the risk of elections and exist in USA, okay, not in China here. Okay, so if China can lead it for a very long term, okay, then political winds shift in Washington. This can happen. Okay, so that is here as well. So a lot of points are here. Okay, now despite this pause, it's important to note that Beijing may retaliate through non-tariff means. So there are non-tariff means through which it can retaliate. Regulatory pressure on US firms in China, currency move, tech restrictions. Okay, the pause isn't peace, just a strategic reposition. Okay, so these are the important point to note down here, that it may not retaliate on tariff front, but it may retaliate on other things here, regulatory pressure on US firms in China, and currency moves and tech restrictions. Okay, so let's try it. So we already studied about this one, US firms, in the previous video here, that it can cause issues for US firms who are working in China, Apple, Tesla, okay, companies who do business in China here. Okay, so it can increase regulatory pressure for them here. Okay, and tech restrictions can happen because a lot of uh, special material which are used in technology in making semiconductors and all of that. So special material is exported mainly by China. So at that side there could be problems. Okay, we can try to dig deeper into currency moves. So let's try to dig deeper into currency moves. Okay, so explain further into currency move on which China may retaliate. Okay, so absolutely, let's dig into how currency moves could be used by China as a non-tariff retaliatory retaliation tool in the US-China trade war. So what are currency moves? See, when we talk about currency moves in this context, we are referring to China intentionally allowing or causing the yuan to weaken. against the US dollar. This is sometimes called currency devaluation or managing the exchange rates to gain a trade advantage. Okay. Now, how China would use this in a trade war? See, if devalue the yuan to offset tariffs. See, a weakened yuan makes the Chinese exports cheaper. Okay, when the value of yuan will weak, then that means whatever China is exporting, that will become cheaper in global markets. Okay, including the US, which could help Chinese businesses stay competitive even with US tariffs in place. So see, US has more tariffs that makes Chinese exports expensive, but by weakening the yuan, the same thing will happen, that it will offset that expensiveness and it will again become cheaper. So, and it can export in other countries as well. Other countries don't have these import tariffs on Chinese goods. Okay, so for example, if the US imposes a 25% tariffs on Chinese goods, a 10% drop in the yuan could effectively reduce the that penalty for US buyers. See, same thing. Okay, so it will neutralize, so that is what can happen. Undermine US tariff goals. So the whole idea of US tariffs is to make Chinese imports more expensive and less attractive, but currency devaluation blunts that impact. Okay, frustrating US policy aims without requiring China to raise more tariffs itself. Okay, so that is what can happen. Send a market signal. A sudden sharp yuan devaluation, even symbolic, could rattle global markets, especially if investors see it as a sign of deepening conflict. That's a form of pressure in itself. So if yuan devalue, okay, if China devalue its currency, then that is a signal. Okay, it will be seen as a sign of deepening the conflict. Okay, not removing the conflict. Okay, not reducing the conflict. So that is a form of pressure in itself. Now, what are risk and limits for China? See, this is also a double-edged sword. So it is a risk and limits for China as well. Even though this is a powerful leverage, China doesn't use it lightly. Here is why. See, what are the risks? So there is a risk of capital flight, that if investors think the yuan is weakening too fast, they might pull money out of China, causing financial instability. See, the same thing is happening in India as well. That in India, the value of rupee is falling against US dollars. So foreign investors are keep taking their money out. The same thing can happen in China as well. Imported inflation. A weaker yuan makes imports more expensive. Okay, so that means, see, it is, as I told you, it is a double-edged sword. If the yuan weak, then imports will become cheaper. Sorry, exports will become cheaper, but on the other hand, imports will become more expensive. So, example, oil, machinery, food, which can hurt consumers and manufacturers in China. Global backlash. The US and other may accuse China of currency manipulation, potentially leading to sanctions or more restrictions from institutions like the IMF. See, right now only uh, USA is opposing China. Okay, but the rest of the uh, countries are staying neutral against China. They are not fighting against China. That means China is still not isolated itself. Okay, but if something like this happens, if it goes currency manipulation, okay, then the rest of then the international community, IMF, will cause sanctions and restrictions against China as well. Then the entire world will turn against China. So that is what China don't want. And domestic confidence. Chinese citizens may worry about the value of their savings, potentially leading to bank runs or to protest if the move is too aggressive. So it can cause internal conflicts as well. Has China done this before? Yes, notably in 2015 and 2019, China allowed the yuan to fall past key levels like 7 CNY against US dollars during times of trade stress or economic uncertainty. Both times caused major stirrings in global market and were seen as indirect responses to US actions. Okay, so what to watch next for next? So what to watch for next? UN US dollars exchange rates. That is what we can focus on. If it starts creeping towards or past 7.3 or 7.5, market may interrupt that as a deliberate weakening. Okay, People's Bank of China. Guidance. The central bank can guide the market by setting daily reference rates. Statements from US Treasury or IMF, if they accuse China of manipulation, it could open a whole new front in the conflict. Okay, just like I explained. Okay, so this is what can happen as well. Okay, so this is the update. This is the latest update on what is happening between USA and China here. Okay. Now there are other things as well that which can happen. Okay. Uh, which China can do beside the tariffs here. This currency devaluation, or it can sell the US loans here. Okay. So a lot of things can happen. There are a lot of possibilities, and we can ask for that as well. If we want to dig deeper into all of this, we can ask for all of that as well. That is there a possibility of China selling US treasuries? So yes, China selling US treasuries is absolutely a possibility, though very drastic form of retaliation. Okay, that would be the highest form of retaliation in the trade war. It often describes as nuclear options, okay, in financial circles, and here is why it matters. What are US treasuries and why does China hold them? US treasuries are debt securities issued by the US government to finance its budget. Okay, basically China giving loan to US. Okay, China giving money to US. Okay, and US giving bonds to the China. Okay, treasuries. China is one of the largest foreign holders of US treasuries, currently holding around $775 billion as of early 2025, though it has slowly been reducing its holding over the years. So still it is already reducing it over the years. Okay, it holds these mainly to park its trade surplus dollars in a safe liquid asset and to keep the yuan stable. Okay, that is here. Okay, now why would China sell US treasuries? To pressure the US financially. Okay, selling a large volume of treasuries could cause their prices to fall and yield interest rates to rise. Okay, that could push up US borrowing cost, hurt markets, and make it more expensive for the US government to finance itself. Okay, to weaponize its dollar reserves. In an extreme trade confrontation, China could weaponize its dollar holdings by reducing exposure to the US financial system to defend the yuan. If the yuan is under pressure, China might sell treasuries to get US dollars, which it can use to buy yuan and support its value. Okay, so that is what it can do here. Now, why it's risky for China and everyone else? Selling treasuries would hurt China as much as or even more than the US. See, it can hurt even more than the US as. Why? Value of existing holding drop. See, dumping treasuries could cause prices to fall. So China would take losses on what it still holds. Okay. Hurts China's exports market. Rising US interest rates could slow US economic growth, reducing demand for Chinese goods. Global market panic could trigger a broad market sell-off, hurting global financial stability, including China's own market. Alternatives are limited, so there aren't many other places to park hundreds of billions of dollars. So if it got if it sells the US treasuries, it will got all of its dollars back. China will get its dollars back, and with the same liquidity, safety, and scale. So it will not have any other place to invest its money. Loss of leverage. Once China sells treasuries, it loses that financial leverage over the US in the future. So if it will sell it today, China sell the treasuries today, it will not have any leverage for the future. So that is here. Okay. So what is the likely scenario? Instead of a mass sell-off, China may slowly reduce holdings over time. A strategy already in place. They are already playing this strategy, that they are already selling very slowly over time. Okay. Rebalance towards other currencies like the euro or gold. Use subtle signals to rattle markets without triggering a full meltdown. Okay. Uh, so what possible? So while possible, an outright dump of treasuries is a last resort move. So it may unlikely may happen. Okay. More of a threat or pressure tactic rather than likely action unless relations completely break down. So Unless relation completely break down, it will not happen. Okay, so selling treasuries might not happen. Okay, devaluing its currency might happen. Okay, and tariff war will not happen as stated by the China itself. Okay, so that is our latest update on US China trade war.